Thank you to be here. As Gerben told us, I think I will do it like this because it's complicated. As Gerben told us, we're not insurance company, I think. We are more entrepreneurs, and the view we want to come with now is really more oriented about emerging technology and understanding how emerging technologies can change insurance in the way we do it, in the process, and asking also the question about do we use it today? Do we use really disruptive technology? And that will be my first question. So I will introduce everyone what you're doing and what's basically why you choose to discuss about the emerging technology, and definitely what's for you. Do we today use disruptive technology in insurance?
I'll take it on. Okay, hello. Hi, my name is Philip. I'm currently with The Loft. I used to work with Zia's team, and the beauty of emerging technology is that if you really look at technology as a way to make life simpler and actually let us work less with technology and more on the things that matter, that's great. And if we look at financial services, there's a tendency to just put screens everywhere, for starters, but there's much more that can be done in terms of really letting technology work in the back end.
Hello, everyone. Tim Attia, I'm the CEO of Slice. Just landed last night late from New York, so I might fall asleep. But for us, trying to sort of reimagine insurance, we thought that we sort of couldn't do it without, obviously new technology. So we're starting from scratch, so we don't have any of the legacy. So we thought, our hypothesis that we had to build all our own stuff, and there's a lot of great technology now with Amazon and machine learning, a lot of great technologies out there. But we also thought that we wouldn't get there unless we could design our own insurance product. So we've designed our own insurance product. We've also done our own actuarial, so we've also done all our own pricing because we have an on-demand insurance product focused on the on-demand economy. So we thought that unless we could sort of do everything the insurance company does, we would be encumbered by existing processes and we'd never get there. Doesn't mean that if we get there, we would have to figure out then how to grow or scale, but we didn't think we could get there if we had to rely on processes from existing insurance companies. Having said that, we are backed by Munich Re, so we do have that behind us.
Obviously, we need insurance company, or reinsurance company.
My name is Patrick. I'm the Managing Director of Investments at Leotech. So we run a two-sided business. On one side of the business, we're a software consultancy to the largest insurers in the world, so working with a number of the guys that have already been up here. On the other side of the business, we're investing in what we see as the future and taking positions in those businesses. So across two very interesting bridges and seeing firsthand what problems actually are inside the insurers. And one thing I didn't feel was touched on before is that at the moment a lot of the guys that have been brought in to lead the digital leadership don't yet operationally have the power to execute. And once we do start seeing the exits and once we see the money come through, then you'll start seeing everything else flow. And on the other side, there's nothing disruptive being done yet. Like everything is just like incremental change. How do I make my customer touch points better? And none of that's terribly interesting from a venture capital point of view. I think Zaya's absolutely on the money. When you start getting into microbiome, genomics, like that's when the really interesting stuff happens, and that's when proprietary data sets are going to come up, and that's when the insurers are going to have their oh shit moment of like a big emerging player that isn't connected to anyone and holds more data that it's able to analyze better. That's going to be the really interesting moment. And I think that could be 5 to 10 years away. But yeah, so that's what we're doing.
Thank you. My name's Dino Fedele. I'm the Managing Director of Allied Insurance Australia. So like Tim, I was on an 8-hour flight yesterday to get here, so I'm a bit under the weather. But I started off my insurance journey working for insurers for the past 17, 18 years. I worked for large global players such as Allianz and Zurich. And then in the last 6 months, went out and started an insurance brokerage with two other partners. We're part of a group of advisors, about 180 across New Zealand and Australia, and we place about $500 million dollars into the market. My business, or our business, Allied Insurance Australia, has 3 core verticals. We've got affinity, small, medium business and corporate, and we're currently working on an InsurTech startup on the affinity space, which is a P2P or peer-to-peer based platform for professional lines. So professions that require professional indemnity to practice, such as a speech pathologist or an osteo, require professional indemnity to practice as part of their registration. So building professional communities online. And it's a very, very early stage startup, so I'm really excited to be here and soak up all the information in the room. Tend to agree with Patrick. I think it's incremental change at the moment. Disruption is a word that's thrown around a lot. I think whether it be wearables, blockchain, connected cars, going to massively improve the industry. The panel before talked about insurers just gobbling up the ones that survive, the ones that thrive, and the ones that die will die. But it's all about collaboration and partnership, like the previous panel said. So I'm really privileged to be in the insurance industry now when all this is happening. So I think I'm going to tell my kids about it.
The question was exactly this. So I will let you answer me on this part. This morning we had a show about Lemonade, bought by Mini. I don't know if you're familiar with that. It's a social broker also. All these guys are engaging with customer. Yes, they are online. Yes, but is it disruptive? And if it's not, what are really the place where there is a disruptive technology and something we can use while doing insurance?
Look, to answer your question, I think it's about what appeals to me is the sharing economy. You look at Uber and Airbnb and the way they're able to share on the economies that they operate. So for me, as you said, Lemonade, P2P, where they're actually giving the profits back to charities. I think that's a game changer. I've had a look at their platform, sort of on their YouTube clip, and they're using AI, and it's really special. But for me, the big change is, all right, they've got home renters and home insurance. What other products are they going to release? So we've got personal lines, as I like to call it. Are they going to get into business insurance, big property risks? Are they going to have a full suite of products? So I think that's where the disruption may lie, depending on what products they release. So I think the low-hanging fruit is personal lines, car and home, where you can group social groups together quite easily. I think as you move through the spectrum of insurance policies, I'm talking about general insurance, is what can they do? That's what I want to see, and that's what I'm sort of working on, is coming from the other end, commercial, professional lines insurance, and most of the other P2P players are focusing on the car or sharing excesses for cars and things like that. So,
Patrick, what about you?
I've got a good rant. I think that it totally makes sense that when you look at the big breakout companies, they come from outside regulation. So, I know there's a lot of talk about regulation will hamper things, but if you look at the big breakout ones, the sort of 5-10 year companies, they operate completely outside that, and they just make regulation change. So, that's one of the biggest things for the insurers is what does that actually look like, and what are we seeing and what are we not thinking about? Because it's really, really easy for the corporate to just go inward, and we see this in payments as well, and just kind of and not think about what's coming down the pipe and how quickly these things are changing. The reason Uber was successful was because everyone has a supercomputer in their pocket, and they took away the need for me to know how far my driver was away, the need for me to reach around and pay the guy, and to know where I was going. Just all friction points. And if you look at insurance right now, it is filled with friction points that will have to be removed across the board. So, I think that inside the insurer, I would be looking at things like, how do I unlock? So one thing we get told a lot is that the insurers have got data swamps, right? So they're just stunning amounts of data, but they're not co-joined in any meaningful way to actually provide information, because where you'll see big wins and big disruption is when there's where you've got an edge, where you have an alpha in pricing, and that will only come from having better data and more real-time data. And the insurers are a long, long way away from having all of those data sources that they've already got talking together. And I mean, we are getting told like estimates of that most insurers are looking at 30 to 40% of their data. That's crazy. So you think about the wins that could be made for the customer if they're able to get to 50%, 60%. And then if you think about if someone came out from outside that, a startup, and was able to start aggregating the data off wearables and weather stations and whatever's coming next, and then if you put quantum computing on top of that and can have simulation of like future states, like that's where we think it's going. So yeah, I think that's two sides of disruption. I think in the near future, the insurers have got to use their own data better, and from the outside, someone has just got to start aggregating that data and feeding.
So you feel InsurTech will be able to manage this data?
Well, I think that the future is data, right? You know, like supercomputers and sensors are everywhere. So it's about harnessing that and giving better outcomes to the consumer. Like insurance, the guy said it before, insurance is super painful. Like it is, it's super painful for me to take insurance, it's super painful for me to claim. Well, that's dumb, like it's crazy, it shouldn't be that. It should be really nice to use, it should be seamless.
Tim, because we are running out. So. Tim, what do you think about this? We're talking about data, we're talking about disruption, but I wanted to know also about the technology. What do you feel, which technology we will use tomorrow, the emerging technologies that we don't use today in the future will change insurance?
Yeah, first of all, I think the time frames you guys are all talking about is way too long. 3 to 5 years is a lifetime. In the Valley, people talk about, well, you know, self-driving cars are way out there. At least 18 months, right? So the first thing I like to say is there will be disruption. I know a lot of the companies coming up. There's a lot of capital going into companies. I mean, our seed round is public. That was off a PowerPoint presentation. We've brought in a lot of money since then. We hope everybody is going to be successful, and there's going to be real disruption, and it's going to be a lot quicker than everybody's saying here, in my opinion. But you know, technologies. I mean, we're doing on-demand insurance, so we had to get rid of the whole insurance process of submission, quote. We're in P&C side, quote, bind, issue. We do have a commercial lines policy, because we're doing the slice of time where people are a business, or a hybrid policy, and I can issue a policy by saying tomorrow for 2 days. If anybody wants to see a demo later, I can show them to you, or with text message. Obviously, we're all using similar technologies. We're all using machine learning front ends. We're all using Amazon AWS. We're all using, you know, NoSQL databases. Lots of the technology has changed. Putting an insurance company in the cloud is very interesting, but the time frames everybody's talking about here is way too long. It's not 3 years. It's what's happening in the next year to 3 years. And yes, if we're successful, we have a big challenge in how do we scale. We're after the on-demand economy. The on-demand economy is global. So how do we get into 100 countries with 4 products? I can't remember who mentioned, I think it was from Manulife, mentioned that, you know, there has to be a bridge back to the carriers. You know, our hypothesis is if we worked with any one of those 5 carriers, we would die a slow death right off the bat, right? We would probably kill them as well. Because I think, but if they worked on a bridge on how we can get to their multiple regions and every country having a different manager, and yes, they have a lot of customers you can get to, but they're very protective and they won't touch them, and the guy who heads operations won't let you touch them. Yeah, we want to collaborate to get there, but we can't collaborate to start because we don't think that that's a model.
So you feel you have first to develop your thing, and after to go and see the insurance or the partners to be able to push them to do better?
In the scaling phase, right? So once you prove product market fit, that your technology works, you can get past
it's really easier.
You can get into a couple of jurisdictions, then, and if that company has worked on that bridge back to their operations, then it might be possible. But I think it'd be very much more similar to the biotech industry, where 70% of the new drugs come out of startups, but they have a 20-year patent cliff, so they know that they can't get to Europe fast enough, they can't get to Asia fast enough, and there's an agreement that they're going to get there right from the beginning. It's not an equity agreement. I have 2 strategics in our company with Excel and Munich, but it's a different model, and it's a model where we admit that we can't get everywhere, and they admit they can't innovate. I never heard anybody here admit that they can't innovate. So it's
That's interesting, yeah.
Yeah, so all we have to do is steal 200 million from each one of them and we're good.
Philippe, what about you? I would like you, because it's interesting every time you say like there is also an interaction between developing a disruptive technology or when we say disruptive, I feel like everyone is agreed to say like we use all the technology. It's more about disrupting the way you do insurance. And my question was, what's the technology for you, but also what's about the collaboration with the insurance company and how do you manage them to push them to innovate?
So we just heard from Tim that he uses me and agree. The point is changing the vernacular is absolutely important in insurance. It's great to do that, but it gets really interesting when you start taking risk. And as a startup, if you actually have risk on your balance sheet, your investors might think twice whether or not the 30 million loss is likely is another question. But if it happens, surely your investors are going to be worried about that. So having a reinsurer and even having an insurance carrier take part of the risk that you assume can be a good thing. But we also have to offer some level of collaboration that is tailored to the individual startup. That we actually look at the startup, we try to work with them, and instead of slowing them down, we rather help accelerate them. And that can be through customer base, it can be through access to markets. There are certainly those things that can help us. But that's not the only thing we can do. And I believe that if you look at insurance in general, right, technology is fantastic, but unless it enables a better experience, why would we care, right? Would you use a fantastic technology if it's super cumbersome to use and it's super difficult for you to administer? Maybe if you're an extreme early adopter, yes. But for the most part, we have to make it easy and delightful. And sure, early adopters are more likely to even take up those, but without that kind of, technology coming close to our daily life experience and making life better, why would anybody be bothered in the short attention span kind of world? So the thing is, for us, technology as an enabler, and surely startups as an enabler too, but I think it is very much a two-way street. And when it comes to risk, people can easily get cold feet. And that's why we're there to sort of be able to help as well.
Right. For me, I just would like to talk about my experience also, because UX, it's all about an application online, 100% digital, and we wouldn't have been able to create all what we have done if we didn't have the support of an insurance company. We're working with AXA, but the fact is they have built all the compliance part also, which is really important. And my question is about, it's great, as you say, it's great to have disruptive technology, but how do you get live? It's about managing the compliance, how you present the thing to the people. And I can tell you, like when you're in Singapore, sorry for that, but that's really, really kind of complicated to do online something easily, and as you say, in user experience, and at the same time validate the fact that you are compliant with all the authority of the country. So how do you manage that also with the disruptive technology?
Well, the interesting thing is, if you look at compliance in general, I think the regulators are definitely trying their best to help, and in some jurisdictions more than in others. And certainly our compliance team has the best interest of the firm in the head, which is our brand. It's still important when you have a large ticket item like a life insurance policy that you have a reputation. Sure as that matters, and sure as you can bank on that. But the thing is that startups are obviously more willing to operate, in a more high-risk environment because they don't have millions of customers that they might offend. So actually working through a startup can be a great avenue for insurers also to test new things, because these startups, in their own brands, will be able to do things slightly differently. Now
actually you say we have to push a bit the authority also. So to test it and say, okay, it's not the insurance, it's us, but we test a new way of doing.
You test the compliance framework by going to the edges, right? Not necessarily by hovering in the middle. But as an insurance company, our job is absolutely to manage risks, including our exposures. So that's definitely still a key part, right? And the better we do that, the better we do as a business. But as a startup, of course, our job is to push to the edges. Why would we stay in the middle? And if you look at I think what startups do really well is explain things better. If you like tenting or outdoorsy, the thing is, if you try to build a tent, usually the instruction manual is very, very complicated that comes with it, right? And a lot of things, whether it's tents or insurance policies or other things, they're very complicated. And I think my generation is unwilling to read a manual, which is a problem with insurance, because if you look at the contract, it's a lot of stuff to digest. And why would we be interested in that? So compliance, I think, appears to be a very complicated thing. It's not. Often enough, it helps simplify things, and it just helps set clear rails of what you're allowed to do and what you're not allowed to do. And that's kind of similar to an IKEA manual of here's 5 steps that you need to have your wardrobe put together, and it's not that difficult. People are willing to go that extra mile if you just give them very, very clear rules and steps and procedures to make it happen.
So is anyone wants to react to this question? Yeah, Tim?
We're launching first in the U.S. market, so we launch on October 5th in our first state, the wonderful state of Iowa. We're licensed in 48 states, but it's a very difficult regulatory environment in the U.S. if anybody's familiar with it. But that includes that literally last night or this morning or whenever it was, I don't know the time zones anymore, we were having breakfast with the state regulator of Iowa. We've met with the state regulator of California, New York. We've got Tusk Strategic Inventors working for us, who work for Lemonade and work for Uber. You got to work first of all, it's insurance industry. We can't storm the castle because you can go to jail doing that. We have to be sophisticated from a regulatory perspective. I don't think we can hand that off to an insurance partner initially. I think we have to deal with that ourselves. Otherwise, we won't even get past their compliance people, much less get to the regulators. And many of the regulators are looking for new ways of doing things, or interested or looking at new things. They're people, they want to change as well. So I think, and by the way, if you're able to navigate the regulation, that is a regulatory mode against other startups who can't navigate the regulatory mode.
And that's also a question I wanted to ask, because when it comes to sell insurance to a customer, the B2C, it could be different. And my question will be, is it like also why we are using a B2B market in InsurTech, like working with a corporate, because it's easier to adapt the way you distribute insurance when you work with a big insurance company? Or is it like the same? I mean, creating B2C or B2B, it's the same, and you need to be like very hugely compliant on this.
Yeah, look, I mean, the only thing that we think about a lot as far as advising, right, is with the regulators, you have to be on the front foot enough that you're there asking the question about, here's what I'm trying to do, and obviously I don't want to go to jail, but how do I work with you so that you're not actually concerned about what I'm doing? And so it's sort of being proactive inside fitting inside the rules, and sometimes you need to be questioning some of those boundaries and limits, right? I mean, that's probably the way we think about it.
What about you?
Yeah, so I've started my own journey with the regulator in Australia, and we don't have to go to state by state like Tim does. And it's one regulator, but it's like butting your head against a brick wall at the moment. So when you speak to the regulator about P2P and your concept, you have to put a 30-page submission in to explain what you're going to do. You're not an insurance company, you're not a mutual, you're partnering with an insurer. So in my country, it's the start of the journey with the regulator. So hopefully we can break some barriers of what we're doing and my company's doing, so others can follow. But it's tough at the moment with the regulator.
Yeah,
I heard it's a bit easier here in Singapore with the
So
regulator. Yeah.
basically, if I wanted to just summarize what we said, it's like really we were about emerging technology, and sorry for that, because we didn't list the number of disruptive technology we can use in insurance. But the fact is, it seems like it's more disrupting insurance, using the technology we have to simplify the way people are buying it, are managing it. And I wanted just to ask you a last question. It was really about if you had to talk about the technology, really, which is not is not used today in the insurance, which will change it tomorrow, all the business model of insurance, what would you say? And is there any InsurTech who's doing it at the moment? If you can not say your company, it would be great.
I like the term life design, because that's what we ultimately care about. We exist and we live, okay? So an insurance company, as we heard, has technically tons of data points. If they were to talk to each other, we would be able to predict where a person's coming from, biologically, kind of what they've done in the past or their history, and also where they are today, where they've been in the past sort of few hours. We can kind of track all those things. So there's a lot of certainty we can get. The only thing we really at the moment are still sort of kind of wondering how to influence is actual people's personal will. What am I going to eat? Am I going to take the taxi or the train? What am I going to do today? And when we actually can provide great recommendations that allow people to make simple changes to their day-to-day lives, that's actually where we change the trajectory of a person's life. And that's ultimately where everybody wins, because we can help people build better habits, we can help people, achieve things that they have never thought of achieving. And it starts by us kind of pinging you and saying, okay, why don't you take a left turn right now, because it's a better option for you, it's a less risky path, literally. There's these small interventions that we can do, and this gives us a hyper customer interaction as well. Could be great for life insurance, and I have yet to see a startup doing that, but I'm very, very sure that sooner or later somebody will catch the ball on for that.
Thank you.
Yeah, I mean, I saw a company in the UK that had risk priced every meter of road in London based on how far close it is to a pub, how close. I mean, I think obviously there's a lot more data. I think that insurance, one of the toughest questions I ever got from a VC was, don't you have to sell insurance? It was from somebody who didn't know anything about insurance. It's a really tough question. And so, I believe that insurance will become embedded. I think the panel before here talked about it. So you can imagine Elon Musk's new 10-year plan. Time period 1, the Tesla's sitting in the driveway. Time period 2, somebody's driving it. Time period 3, it's driving itself. Time period 4, it goes out and starts making money for you. And you can take that to life insurance. You can take that to anywhere. If the product is embedded, maybe we don't have to sell insurance anymore.
Okay, thanks. So it becomes a service.
Yeah, totally. It is. It will be. 100%. It will become a service. But the biggest thing I think about is exactly what everyone here has talked about. Is that I think probably the big break point will obviously, without throwing too many terms around, is like the Internet of Things and the amount of data that it's going to throw off, taken with some machine learning and AI. I couldn't say more terms. And then with quantum computing, it's going to sit on top of that and actually be able to do the computation. That at that point, that is going to be really, really groundbreaking in this industry. And I think you're right. There's time periods, right? There's going to be changes that are apparent soon, and then as you go through. But I think certainly once you start banging quantum computing on the top of that, that's going to be a massive change, because you're literally going to have artificial intelligence trying to predict the future with a lot more data than it is currently able to do based on the turn that you just currently took.
Yeah, I think what everybody's talked about is more touch points on the insurance engagement process, whether it's buying, renewing, claiming. I think wearables can do a lot of that, creating more touch points, so you're engaging with your insurance every day. You might get a message, you drove 3 kilometres, you have to pay X amount, and just providing more risk information as well to manage people's risks, because that's what we're doing. We're managing people's risks, we're protecting what they love, their businesses, their cars, and we need to educate the consumer that insurance is part of everyday life, not this grudge purchase that you have to do once a year. And when you come to make a claim, it should be a good experience. I'm arguing with an insurer at the moment over 2 words, reasonable grounds. What they think is reasonable grounds, and what I think is reasonable grounds for my client. So my client's sitting there waiting for a claim to be paid, and I'm fighting with an insurer. That shouldn't happen, but that's the reality. And we just got to get better.
Thank you very much. I wanted to thank everyone and thank the panel to discuss with us. I think it's very difficult to talk about these topics because it's very large. And I think what's really interesting about what we just said, it's really about a mix about many different technology. And I would say that it will change the way technology and the usage we do about the data, because it's a lot about the data you're talking about. We collect the data, but after we use it to predict some kind of information, will change the way people and insurance company are pricing the product. And I thank you all of you to discuss and to give another view about insurance from the insurance company. Thank you so much.